I get why you're so confused with the real estate market. It's articles like this that just makes me so mad. It says, okay, here's the headline. Some people are giving up on buying a condo in Toronto and it's bringing sales down. But then 4 hours later, by literally on the same publication, by the same author, it says this: Toronto condo sales are rebounding hard so far in 2021. So this article says that sales are dropping significantly, and then this article says that condo sales are rebounding hard. What? Okay, so this article, first of all, let's just focus on this one. It says here that they get their data from a listing website, Strata, and it says that the number of condo sales in the city has dropped quite substantially, down 17% in April as compared to March, all while the numbers of units in the market actually increased slightly. Okay, so I actually pulled up the data here for the past 26 years, from January 1996 all the way down to April 2021. Okay, so she's right. I mean, last month had 900 sales in downtown Toronto condos. And what I do is I take CO1 and CO8 districts. That's basically from Dufferin to the DVP, just south of Bloor. Okay, so you add the two numbers together, you get 900 condo sales. Okay, great. The previous month in March, and I say previous because like we look at April's number, right? Because it's just, we're in May now and we don't have May's numbers because May didn't happen yet. So we're looking at April, and the previous month to that, which is March, there was 1,044 sales, and then February was 911 sales. But if you look at all the previous years, here, 687 sales in January, and then December 628, 496, 511, 529, 512. Yeah, and it goes from there, right? So if you take the average, including those up until April 2021, the average is 344 condo sales in CO1 and CO8. Okay, I get it. There was a condo boom in the past decade or so. So the average number of sales from April 11, so 2011 to now, we're looking on average 499 condos. So 500 units in downtown Toronto. We're like double that. If it's down 17% from the previous month, big deal. We're still double. It just bothers me. Now the number of new listings were up slightly. I mean, 1488 versus 1360 in March. But then we go take a look at the sales to new listings ratio. And as you remember, the sales to new listings ratio just tells you basically the temperature of the market. In my previous videos, you can see that. Basically, we look at the last period. If the pace of sales happened and the number of new listings came on the market, we take the two numbers together. So in this instance, there is 900 sales, divide that by 1488 new listings, then basically it should be double in order for it to be a balanced market, right? Because you have the number of sales happening and then double that amount of new sales. So half of the new sales are the ones that sold, and then the other half replenish the inventory. And if the pace of sales continues to happen again, then that'll be eaten up, and then it just keeps going like that, right? So 50% is a balanced market. Do you agree? So I put a little range here. I usually put 40 to 60%. Right now we're at 60%. So I would say we're still in a seller's market. The previous month, yeah, 77%. Before that, 91%, 75, 116 in December. Okay, sure. So it's gone down a little bit. Now let's look at the historical sales in condos. And what do we get here? We get a big uptick and a slow and steady uptick. In the past few months, it's been a big uptick. So I get that. But ultimately, there's a lot of reasons why you need to invest into real estate, and there's reasons why you shouldn't be afraid of it. Like if you think about the market, it just comes down to supply and demand. Supply, let's just say it's fixed. I mean, overall for the past, I don't know how many years, it's been anywhere from 25 to 40,000 units being delivered to the city of Toronto. There's a variety of reasons for that. It's the amount of trades that we can get to actually build these places, and the amount of supply materials, the cost of the materials even for that matter. There's only so much land. The zoning laws don't only allow you to build so many at a time. It goes to the zoning approvals, and there's a whole bunch of things that need to be required to get proper zoning for it. In my opinion, it's relatively steady about how many units they can deliver to the market. So that means supply is relatively fixed. The only thing that can change is demand. And if we look at two things that are related to demand, which is why I think prices are still going to continue to go up, is because number one, immigration. Canada has an immigration target policy of 1.2 million people into Canada. The majority of them are coming to Toronto, let's face it. Like, we're the economic center of the city. So either Montreal, Toronto, or Vancouver, that's where it's going to be. Now you could say that, US is, with Biden's leadership, he's opening up the visas to allow more people to go into the US. And so we're going to see a lot of brain drain, especially since our prices are so high for real estate. There's other parts of the US that are a lot more attractive to immigrate to, and the rest of the world, like other parts of Europe, it's pretty attractive. I get it. Canada still is wonderful, and there's a lot of reasons why people choose Canada over anywhere else. I mean, it could be that your family, if you're coming from another country, has roots already in Canada, and some of your other extended family members have decided to choose Canada. I love Canada because it's so multicultural and so diverse and so many different things here, and it's just all inclusive, and I love it. I love that it's inclusive of everybody. We accept everybody, which is pretty awesome. So I think the demand, especially for the next 3 years for the target immigration target, it's gonna cause a problem for the demand. And even if those people are coming here to rent first when they come here, well, that's gonna push up the rental demand, which will eventually bring all the investors back to the table, and it's just gonna push up the demand even more. The other thing that a lot of people don't talk about is the printing of money. The recent budget calls for $158 billion of deficit. They're basically creating $3 billion of money supply a week. So they're basically printing $156 billion a year to make up the deficits that we're spending for the stimulus programs that we need to do, and buying vaccines, all these things, right? There's a projected deficit to at least 2026. So if you're printing more money, that's just diluting the money supply out there, which means that these things, how do these things get up to $2,000? I don't get it. The phones were not supposed to be this expensive. They are that expensive. You can name anything out there. Price of it is just going up, which means that the money that you make is just being diluted. The buying power is being diluted. So if you're buying a condo for $600,000, your payments are, I don't know, call it $2,000 a month. That $2,000 mortgage is not gonna feel like $2,000 4 years from now. It's gonna feel like a lot less. And then the last reason, which I think we all know, is that the interest rates are probably gonna stay very low for a long time, just because the rest of the economy hasn't recovered yet. So I just think with cheap money supply, with the amount of money out there, and then also the demand for immigration, for people actually living these places, we're gonna have a strong market for the next 3 years at the very minimum, if not longer. Hopefully you don't overthink it. It's just really simple. It all comes down to supply and demand. I mean, I guess in conclusion, it's not wise to bet against Toronto real estate, especially not for the next 3 years, maybe even a bit longer. If you have any questions, you can always give us a shout. But until then, I'll catch you in the next video. Thanks for watching.
Add it up.